Scott, so let's look a little farther out, 6, 12 months. You sound more constructive. What are the tailwinds exactly, Scott, you see?
Yeah, Josh, we are really constructive about 6 to 12 months. I mean, this is still a story where, we have something like AI, which is, people have been likening AI to the internet and PC revolution of the mid to late 90s. I think that's reasonable. I think actually probably a more apt comparison, though, is when basically the widespread adoption of electricity in somewhere like the United States. I mean, we think it's that important to the economy in terms of productivity gain things. So you have that as sort of like the massive tailwind that is going to kind of power everything else. But then you have other things that are at the back as well. I mean, you have an incredibly constructive earnings picture. We're just through earnings season now. We get 16% year-over-year EPS growth, 8% year-over-year revenue growth. Those are really great results. You're going to get fiscal stimulus both from the government with respect to the big beautiful bill stuff, and on the private sector with respect to capex. I mean, you can look at capex spending for empowering AI and basically building AI out as basically a private sector stimulus package. So if you put all that stuff together, and you got a consumer that is still fine, a labor market that is not dynamic and not robust, but certainly stable right now, and that points paints a pretty nice picture for corporate earnings and for the stock market going forward.
Scott, on that AI trend you bring up, though, that NVIDIA print, that was a strong print, it was a strong guy, and the stock sold off, Scott. And I'm just wondering what you think that might suggest to us as a
place that has always known that it's vulnerable. Beneath bridge, see.
I was muting it. I changed
in just 70 years, son.
This is still a story which ends up making some sense.
So it's a market movers with Yahoo Finance.
What we make out of the NVIDIA stock reaction specifically is that its position wasn't clean enough. There were still too many guys out there that were too long this name or too long this scheme.
Okay. Good morning, good morning, good morning. Today is November 22nd, 2025. They still talking about Bitcoins and everything like that. Bitcoin is crushing. Since October 6th of 2025. This is today's Bitcoin. It's 84,591. November 22nd. It was down way a lot. So if I go back on October 6th was 124,000 October 6th. And that's where it just shoots down from there to today's 84. October 6th. Mark that, October 6th. So, welcome to the channel. We are Crypto Market Watch, and this is our weekly or bi-weekly blog, and explain a little bit in why they're cashing out on my intake on that. So October 6th, people start selling. It hit the 124,000 mark on Bitcoin. One part of that is there's a prophecy for having for every 4 years. So this year is the 4 years. But if you look back and you go back 5 years, keeps going up. So you got all this mark over here that it goes down, goes up, it goes down again, it goes up, it goes down. I don't have the full thing, but the track records, even it goes down, it's gonna go up again. So this is just for 5 years cycle. 5 years record, not the cycle. It's every 4 year cycle. So let's say you bought Bitcoin 10 years ago and you bought it very cheap, and you see the cycle every 4 years goes up and down, goes up and down. But you come to an age, you're retiring this year. You don't want to wait another 4 years. So that's 2029. That you're retiring in between 2025 or 2029, and you have that shoots up 124,000, I won't blame them. I'll do some cashing. I'll cash half of it too, and start my retirement instead of waiting 2 more years. If they're holding billions of dollars, cashing out 500 million, I won't blame them. It's part of the business, it's part of the cycle, and that's how it is. So if they don't cash it now, they'll be cashing out at 2029, and they probably 70 by then, or so it's part of even with the stocks. It says 5 years before you retired, you're gonna take your stocks out of the aggressive stocks. You're gonna go for a more non-aggressive and more secure return to it. That's part of that. So it creates, when people cashing out like that, it creates fear to regular people that bought some Bitcoin or crypto, because every time Bitcoin goes down, it follows Bitcoin. Everything, Ethereum, Solana, whatever coin you have, and it follows it. Bitcoin goes down, everything goes down. So it scares the people, like, oh man, I got a gain of 20 grand, and it's coming down. Now I'm down to 15 grand, and people cashing out before they hit the bottom of it. Like they're probably entry level. They will either go a couple hundred, a couple thousand in, or they go break even. But they put in 1,000 and they back to 1,000, or they jump in higher and they're negative right now because they come in late. But if you come in early, you're still in like a break even, but it's gonna come back up. That's my prediction. So why is it going back up? Because I don't know if you hear the news, but everybody is jumping in. Big companies joining crypto. American Express, Visa, MasterCard, Cash App, they want to be part of it because they want to get the charges. You use them on their credit card, you pay fees on it. Let's say 5 cents per transaction, you got 1 billion transaction, you do the math. So they want to have a piece of that because they seeing it that it's crossing over to crypto market now, or cryptocurrency, that people are starting to wake up and use cryptocurrency. So all the buyings and everything, it shoots it up to 124,000, and those people that are retiring, or they want to just have a comfortable life and they're holding it for the last 15 years, they're cashing out. So most countries too are following the United States crypto reserve. So other countries are jumping into crypto reserve. So there's a lot of buying in there and a lot of selling because they're retiring. So like I said, the other people just follow. Everybody's selling. But once it hit the rock bottom on it, they're gonna end up buying again. But those big companies that are investing on ETFs and everything, that they buy Bitcoin at 124, 110, maybe 100,000. And they have the big part of it. So let's say they spend $1 billion. They bought $1 billion of Bitcoin at 110 or 124. And they come in, when they come in, it was high, and it's a high risk for them. So what happened is when the 4-year cycle come in, they start selling it too. So they probably make some gains out of it. They bought 110, it went up to 120, 124, and they got some gains, and they are gonna sell it because they know everybody's gonna follow them because of fear. You put $100, 200, 300, 1,000, and they make like $50 out of it, and it's say, oh, I'm gonna cash it out before I lose the $50. I'm only gaining $25 now. People just follows, So the strategy for a big company that big pockets is they sell out too when it starts selling, and when they hit the bottom, what is it now? 84. So they sell it at. They bought it 110. They sell it 115 or 124, worth $1 billion of Bitcoin or cryptocurrency, and now it's back down to 84. So they are coming back to buy it at 84. So when they just wake up and they start, oh yeah, we need to get on board with cryptocurrency. And when they get in, they join in on 110, 115, 120,000. That's too expensive. So now it start to selling. It's an opportunity for them. They start selling too. They buy 110, they sell it 115. They make the game. And they're watching this market. You buy back at 84,000, you're in business because it's gonna go back up again. But this cycles every 4 years. So we're gonna see this again. This is my prediction in 2033, 2037, and 2041. But it might be not that much of a drop in all those years because that's 4 years from now. It goes like a wildfire. People start listening and hearing about it. It's a mainstream media, and they don't know how to do it. They're scared, and I don't know how to buy Bitcoin, but it's becoming easier and easier to buy Bitcoin now or cryptocurrency because more and more people are learning about it, and people are teaching each other. They're friendly. Oh yeah, you should buy 100, 200, 500 bucks so you don't get left behind. It shoots $1 million, $100 will be a good money. But that's what's gonna happen because people, let me put 10 bucks, let me put 100, let me put 500, let me put 1,000. Those people are holding because they're just putting a bet on it might shoots up in 10 years from now. But that will bring you growth slowly because they're long-time holders. Those are their extra money. They got extra $100, and they says, "I don't want to left behind." Fear of missing out. So they see Jason's buying it, and another friend of them start talking about it too. And another friend start talking. So now 3 people is talking to them about cryptocurrency, and their curiosity came in. It's like, oh, let me get on board in that, and they don't want to lose money, so they got extra $100. They put them in, and you just leave it there, and they're waiting for Jason to tell them, oh, it shoots up 300,000 this year, and they take a quick look at it, but they're still not cashing out because they only put $100. They're probably like 300 when it goes to 300,000, and it doubled up like that. But you can do times 2 on your $100 investment on it. That's why it keeps going up in the future because people are being aware of it and they're putting in a small amount of money. Let's just say I put $1 for it, $1, and 1 million people put $1. So you just add to the liquidity $1 million in Bitcoin. That's just $1. But if people put 100 or 10, it makes difference, big difference. Gemini credit card just launched not too long ago. You instead of getting points for your credit card points, but you can use for your hotel or your airline ticket, they're giving you Bitcoin as rewards. So you're investing at the same time you're using the card. So that's good thing too. Crypto.com, I've been using them a long time ago. So before even it was become on the media, you can buy gift cards with your cryptocurrency. So you buy it with your cryptocurrency, and they send you the code for your gift cards. It's a good Christmas gift before, and I did that a lot of time. I was in that big of holding. I make a gain, I buy it, but that was a mistake. I'm a big time holder right now. And why am I holding? Because most of my holding are on staking. They are producing money. You stake it, it's just like a CD on the bank. You put your money in the bank, you put it in a CD, you got 3-4%. One of my biggest staking is 16% return per year. That's why I'm holding it in there and I'm not touching it. I just kept reinvesting the returns out of it every time I come back. So, why is people moving into cryptocurrency too? So another one is the Feds. The Federal dropped the rate. I don't know how much, but I know every time they drop the rate, it hurts the bank. So let's say you have $1,000 in the bank on your saving, and you're getting 2% out of that every month, but they lower the rate, so the bank is not making much money out of your money. So they might not be able to give you 2%. You might get 0.5% or 1% because the Feds drop the rate. If they drop it to zero, your bank's not making money out of the money that they're holding that they put in the Fed Reserve. You follow? Because every 30-day cycle, whatever the money that they put in there to the bank, the money you deposit to the bank accumulates on their end. They're probably getting 3-4% because they're lending the money that you put onto the bank. And if you put your money in the savings because you're not touching it within 30 days, you get 2%. But that will change. The more the Feds drop, the return on it, the less the bank's getting return. So the less the bank getting return, it domino effects to you. Now you're not getting 2% no more. So I got on my list here is understanding 21 million of Bitcoin. That's why it's the mother lode. Other companies, they got 1 billion supplies. Some of them are trillions. But Bitcoin's only 21 million. And by saying that, if you compare it to a stocks, New York Stock Exchange, you buy a certain stocks and it maximizes it. You buy it at $1, it shoots up to 15, but they run out of stock share. So they split the stocks. So your one share become 2 shares. So if you have it at $30, you got 2 shares now at $15 a piece, but you still got $30 out of it. In Bitcoin, that's not gonna happen. 21 is 21. No more, no less. That's all we have supplies for Bitcoin. And it's max out. Somebody's gonna sell their Bitcoin on a higher price. Somebody's gonna buy it. No splitting of Bitcoin because 21 million is 21 million. Oh, I have on my note here too. ETFs company are just like, it's a stock, but they're ETFs. So ETFs company invested on Bitcoin. They buy $1 billion worth of Bitcoin and they leverage the value on it, and they sell stocks and they promise you, give you 5, 10, 15% return on that, because leverage is you buy it $1, it shoots up to $2, they have the equity of $1 in it, plus at the same time they borrow on that money and they use it as a collateral. So they doubling it up. The price of it goes up already, but they don't sell it, but they get the leverage of using it to borrow money. And they buy another Bitcoin on it again, so it adds up and adds up. So that is my explanation. So I have a chart. This is our chart. 21 million, right? So the Bitcoin goes up and down, up and down. It does the 4-year cycle in it. Goes like this. Goes up, down, up, down, up, down, up, down. But with those $100 or $200 people that joining in and jumping in, it adds up through time. Time is money, so it keeps adding up. So I'm gonna put some markers in here so you can see it. If you put $100 monthly or weekly, or you can put it daily, that'd be good too. So you buy it here, it goes up and it goes down. You buy it down there, it goes up, it goes down. But in the long run, it's gonna shoot up over there. You get the ups and down, up and down in it. I hope you guys can see it. But those marks over there is like whatever you contribute in it. And it depends on your goals, because you got those 4-year cycle, and I bet it's gonna drop again. So let's say this is 2041. This one is 2037. This one's 2033. This one is 2029. This is 2025. That is what's gonna happen. So it gonna goes up and it's gonna goes down. But you're still in the positive through time. Time is money, so it keeps accumulating it. And while you're holding it, I recommended you stake your Bitcoin and other crypto and making money at the same time as doing it, like the big companies. All right, I'm gonna share you. If you can see it, that is my QR code. There you go. Blurry. There you go. Scan me. So I own crypto, and it's named after me. And it's just like 8 months ago when I made it. And we got a lot of progress. So it's slow, but still on the positive side. We're still going up in the progress. You can see that. I just want to share too. I just got my Bitcoin card. Cash App. I designed it like that because I'm big in crypto. Happy to that. So let's see what we're watching it live. So earlier we're in the green. Now we're in orange. It went down a little bit. That is live right now. See how it's moved? And that is my blog for today. Keep buying it, especially it's on sale right now for 84,000. Just join in and learn it. Do a lot of research. Do your own research. Do a lot of reading. Whatever's comfortable. You got $10, $5, 1,000, 10,000. This is the time to buy because the market is slow and it's gonna go up pretty soon. And you might get a big gain. But even if you buy it on the high end, if you get the time to leave it in the market for a while, you're good. I don't recommend it as a day trader on Bitcoin unless you're focused on it 24/7 and it shoots up, you sell, you buy it low, you sell it high, you know. But I don't want that stress. I just want to leave it there and let it accumulate and make a dividends interest on it on my staking. There's the chart for the last time. Okay. I always ask you guys to like, share, and subscribe. I think we have 36 subscribers right now, and it takes about 50 subscribers and higher to do a live video on YouTube. I like to do a live video on YouTube so I can take calls while I'm doing this video, so I can have a nice conversation with you guys, and you can interact if you guys have any question. All right, it's Jason Pena with the JMP cryptocurrency token, and I'll see you probably on next weekend or 2 weekends from now. Let's see what we got. We keep an update. Oh, my $100 challenge. Let's see how much we got. Yeah, and update you guys with that too. With all these markets dropping down, let's see how much we got. Ooh, that's not good. We are 96 bucks and 49 cents. That's our $100 investment. It is all the selling and everything. This was started July 11, 2025. It's right there in the top. I put it in there. So we invested $100 on the coins, and we are $5, $6 less, or $5 less from our initial investment. That's on $100. If you have millions in there, that's a big difference. But it's a control study. We're not adding any coin onto this wallet. It stays the same, and we're gonna see it in 10 years from now. Let's see how much we got in there. So initial investment with a coin, same amount of coin on each crypto. We're not changing it. I might make another one because I'm developing some new coins. I'm gonna make another $100 challenge. I'll keep you guys posted with it, and I'll create another wallet through it, and I'm gonna have a different set of cryptocurrency on it. But that's it for today. Like, share, and subscribe. We'll do some live call, and we'll be answering questions in the future when we get to that mark. Again, crypto is not going away. Have a good one. Let me see if I can do this.